doing things in traditional financial centers in a way that appeals highly to the most sophisticated investors in the institutional investor class.
Hi everybody, welcome back to Value Tokenized with Masha and Zenia. We have seen a lot of interest coming in from China, previously with blockchain and ICO projects and now to STOs. But there's a lot of controversy, I think, from regulatory standpoint, from what's going on. But we definitely see a lot of attention from the region.
And that's why today we're talking to Matthew Graham from Sino Global Capital. He's the CEO and founder. And we're discussing from the perspective of an American who's based in China. He has been based there for many years. What's actually going on in this region in terms of security token offerings and tokenization, and what we should expect in the future? Hi, Matthew. Thank you so much for joining us today at Value Tokenized. Can you start from telling us a little bit about yourself and what you're focused on at Sino Global Capital?
At Sino Global, our legacy business for many years has been representing international technology companies in Greater China for strategic partnership and investment. For myself, that's kind of the second half of my career. The first half was a portfolio manager at a long-short hedge fund on Wall Street. So, but for many years, we represented tech companies that have specialized needs in China. The concept, the vision was always that very naturally and organically, we would develop one or more sector competencies, and that definitely happened over the past couple of years with blockchain. We became increasingly involved in the space until deciding more or less to focus exclusively on blockchain, except for servicing our legacy clients. And as part of that, we have our new initiative, which is called Liquid Value. And that's focused on two things. With our Chinese investor LPs, we've been very quietly and discreetly, with our Greater China LPs, we've been quietly and discreetly investing in many STO projects around the world over the last year or so, especially with regards to the infrastructure pieces, the building blocks that make it all work. And then number two, we are servicing the great demand that we have for Asian investors who need professional fund management of their crypto assets. So you could think of it as a crypto hedge fund.
And can you tell in general, how does a security token ecosystem look right now in Asia?
That's a great question. I think the best way to answer that is by first taking a step back. And I think when people say security tokens, that really involves a lot of different things. And so the first breakdown, in my opinion, is people use that phrase to describe putting guardrails, putting safeguards on ICOs. So an ICO only in a regulated security context. That's the first thing. And then the second thing is where people have the concept of adding digital intelligence to a traditional financial offering. So that's kind of the first break point. And those are really very different things. And they're for different types of investors. One is highly speculative, one is very institutional. So I think it's important to first kind of define your terms. With that said, I think Asia, much like much of the world with respect to STOs, is in a little bit of a building phase. It's especially in Asia, there's a need for one or two high-profile projects to really take off. And that can very well be international projects that could have been T0 or a similarly high-profile project. If it were to really get traction, I think that really would be the impetus that people need. And then again, with respect to that building phase, many people are very focused on buying up the necessary broker-dealer licenses and applying for for regulatory sandboxes in places like Hong Kong and Singapore. It's very much a building phase.
And you mentioned that Sino Global Capital has been investing with Chinese partners in tokenization infrastructure projects. Can you share me your criteria, what you're looking at?
Those are two very different questions. Let me start with the first one. I think that it relates to first principles. A lot of people are trying to marry put pieces together in a way that doesn't quite make sense in the security token space. So to give an example of that, if you are looking to tokenize an apartment building, and because your thesis is that you will then have more fractionalization and maybe you can get some liquidity and things like that, and then you're trying to bring that to people that are maybe ICO speculator types, that's not going to make a lot of sense. So I think it really is about putting together who, what, when, where, and why in a way that makes sense for on both the business side and the tech side. That's really what we're looking for. And we're looking for typically projects that are more consistent with our long-term process and that are consistent with our thesis that a lot of the value is going to accrue around the concept of programmability. So in other words, it's not just about, well, we're going to have a regulated ICO. That doesn't really make sense to us. It's about the fact that we're going to use tokenization to add intelligence to traditional securities. And it's about being able to tokenize traditional assets in a way that has real-world applicability, rather than just trying to put pieces together that, because it's cool. So we're really focused on programmability and intelligence for traditional assets. That's where we like to be.
So you mentioned that you're looking at projects for building infrastructure for tokenization, for tokenized, maybe future of economy, so to say. Do you see many projects, infrastructure projects appearing in Asia? Because we see most of the activity in the United States by far.
The short answer is we have seen many of these projects, but I think it's important to understand too, we talked about these different breakpoints. I think it's important to understand that when you talk about STOs, you have people coming from different places. And so the one place is you have people that have been in the crypto space for a while and they rode the ICO wave, and ICOs had some fundamental flaws, and so they kind of were dying. And so people wanted a new hook, and they thought maybe that could be STOs, and so we'll kind of do that. So we've seen a lot of projects coming from this group of people. Typically, those don't pass muster to us. Those don't really make sense. And then the second group, the second area is we have traditional financial players that are kind of engaging in a rearguard action to protect their legacy business. And those tend to be super interesting from a technological perspective, such as having T+0 settlement and things like that, and increasing efficiency. From a tech perspective, those tend to be super interesting, but they aren't really suitable for our investment thesis, that kind of optimization concept. And then I think that where we tend to see the most interesting projects come from is people that understand both blockchain and finance, West and East. And so we're super excited about the sandboxes and about projects coming out of these fintech cluster cities, such as Hong Kong.
And a lot of projects have recently announced their partnerships with Asian players, for example, like Securitized and Sino Global Capital. There is Asian Security Token Alliance that has been created quite recently. And a lot of players seem to be doing that. And what's their main objective in the Asian region? What are they trying to achieve by this?
Sure. So of course we can't comment on specific players or specific partnership, but I think there is a general understanding that these are two ecosystems that are a little disconnected. Of course, that's part of the value that we bring because we're kind of uniting the West and East ecosystems. So I think that that's why we see a lot of partnering as people try to gain a greater understanding across the two disparate ecosystems, just like we see Google and Baidu, we kind of see in East-West blockchain division. But then number two, I think there is a real understanding that kind of from top to bottom, all aspects of the blockchain space have a very Asia-centric piece to them, whether you're talking about mining or whether you're talking about ICO investment or really any aspect of blockchain. And so I think there's a recognition that a lot of the investment in the STO space ultimately is likely to come from Asia, especially Greater China. So certainly there's a lot of focus on partnership for those reasons. You can't do China as an example. If you're a European company and you want to do China by yourself without having a local team and or partner on the ground, you're really going to have a hard time. I think people do realize that.
Median, you seem to see really tremendous potential for tokenization in Asia and Greater China, as you said. How does the regulatory side of this look like? Because so far China has been pretty restrictive in this sense, but how and when we will see opportunities in this regard?
Sure. So this is a good question, and I think the first thing to understand is that it's really kind of folly to predict the Chinese government's future actions with respect to anything in blockchain. I think that's kind of a fool's errand. Number two, I think there's, by design, the Chinese government does like to leave things in kind of a gray area where there's unwritten rules of the game and they have periodic clampdowns and then they have a period of loosening. I mean, none of this is anything that really relates to the business that we do, but I think it's important to have kind of that general understanding. And then I think the next thing that's super important for understanding China specifically is they have an approach that it is seemingly a little contradictory, but it's actually quite intentional. They very much favor blockchain and they view it as an extraordinarily strategic technology that they want to really support and encourage entrepreneurship and innovation related to it. In fact, it's part of their 5-year strategic and technological development plan. With that said, they very much want it to be a controlled, almost kind of neutered blockchain. So basically crypto without the fun, sexy, and money part. And that's kind of their general approach to innovation. I mean, obviously we see that in a roughly analogous way with the way there's a firewalled internet in China, as we all know, but also because of their need to clamp down on unnecessary speculation. And additionally, to maintain their capital controls, they very much want to have their foot on the accelerator and the brake at the same time. And so they very much want to foster blockchain development while keeping it away from anything that could disrupt their currency controls or lead to any kind of mass disturbance or disruption in social order related to related to unhealthy speculation. So I think it's kind of important to understand that backdrop. They're super pro blockchain if it's in like a really controlled way.
And as for tokenization of real-world assets, there seems to be a huge market opportunity there as well. For example, tokenizing real estate, tokenizing equity of Chinese companies. Do you think it is possible, and will it take off in Asia and especially in China?
Sure. So in terms of your example of could you you were alluding to, could you tokenize Chinese real estate? This is very much an evolving body of law, and there has been, I'll leave this to the lawyers, but there has been some discussion that you could have a modified version of the VIE structure. The VIE structure is the structure that allows Chinese tech companies to IPO internationally, including Alibaba. There's been a lot of discussion that you could use a similar onshore offshore structure in order to tokenize Chinese traditional assets. That is very much an evolving body of the law, and it's unclear that would ultimately pass muster. But then again, I would refer to our earlier discussion of first principles and who, what, when, where, and why, and do all these pieces fit together. It's not totally obvious to me that I understand that there's very much a school of thought that real estate is the low-hanging fruit in terms of tokenizing traditional assets, but it's not obvious to me that there's a real market in terms of tokenizing real estate for Chinese investors, especially if you're going to bring it to traditional blockchain investors is quite the misnomer. But if you're going to bring that to crypto people that are intensely speculative, I don't think that's going to make sense. And then if you bring it to traditional investors, I don't think they're really ready to really understand that. So I think that relates to our conversation about putting pieces together in a way that makes sense in the real world. I'm not convinced that if you do China to China tokenizing real estate, that's something that is logical at this time. Tokenizing international real estate and bringing it to greater China investors that already have money offshore but would like additional diversification, that could make sense. It's all about having a real business case and pieces that really fit together.
Can you share your view on what do we need to see the industry maturing and gaining its full potential?
I think that we're at an inflection point with the industry, and there's a lot that's needed, but I think some of the things that are really holding the industry back, I think certainly with my home country, the United States, it's logical from kind of a game theory perspective that the United States government is acting in the way it is. Wall Street combined with Silicon Valley are two of the most important financial centers and tech innovation centers in the entire world. They have an enormous legacy business to protect. It kind of makes sense from a game theory perspective, a logical perspective, that they're dragging their heels in return in terms of having regulations that are conducive to innovation in the fintech space. But I think it's really holding everyone back, and it's my hope that the U.S. will adopt a regulatory approach that is more pro-innovation while still protecting retail investors. That's certainly something that would be needed. It'd be great if that happened in China as well, but I think that's probably off the table for the time being. I think the second thing then is a higher caliber of projects in the security token space is something that would be super useful for adoption. There's I think it's important to get a sense that tokenization of traditional assets will include tokenization of the best assets that a professional investor would really be interested in taking a look at. We really need higher quality deal flow, would be super important.
Yeah, I have a technical question. We see a lot of tech teams coming up with protocols, so-called security token standards. Do you think it's a sign of immaturity still of the industry? And what, in your opinion, tech protocols need to be in order to achieve mass adoption? And will we actually see one particular protocol just coming out there and becoming the standard one?
That's a really great question. I tend to have the personal view of being a little more skeptical of some of these protocols. I fully appreciate that people are trying to lock in and capture value, but ultimately, I tend to be pretty skeptical. I think we've got way too many protocols that are trying to do pretty similar things. I think it's tough for me to understand why the value would accrue to a proprietary or semi-proprietary protocol in the way that many protocol developers seem to be hoping. I think we've got way too many people working at the protocol level. To answer the first part of your question, and then the second part was what again? I think it doesn't. I understand everyone wants to, like, what if we could create another Ethereum?
Yeah.
And have network effects and make billions. I just don't think it works that way. I think you have 100 people trying to either kill Ethereum or to have the one security token protocol that is going to have mass adoption and beat all the others. I think that's that's not a game that makes sense to me. I don't think it's going to work. I fundamentally don't believe it's going to work that way. Even if you have, for example, with Ethereum, even if you have better consensus protocols and scalability, I think it's tough to understand how you're going to kill thousands and thousands of enormously talented developers that could ultimately implement whatever feature you innovated, combined with the existing network effects. And then on the other side, I think this whole concept of trying to start from day one with a proprietary protocol and lock everyone in, I just don't think it works that way.
And if you were asked to point out one or two particular projects that you think still stand a chance of being like the next big thing, what ones would you name?
So if my thesis is wrong, how would it be wrong? I think that rather than trying to kill Ethereum, people should have more specialized use cases that can plug and play with Ethereum in a modular way. That makes more sense to me, rather than trying to kill off something with enormous network effects. So I would kind of answer it in that way.
Mm-hmm. And probably
you could have more specialized focus related to decentralized finance and doing cool things like MakerDAO. That makes more sense to me rather than trying to be a better Ethereum.
And probably the our last question for today's interview. Can you share what do you think we'll see in the space during the next year, and what are the particular aspects of the industry that are worth looking at?
My hope for the next year is that we will see our first one or two real breakout use cases in terms of projects that satisfy who, what, when, where, why, and how, putting all those pieces together in an intelligent way that allows us to applications that are not possible in either traditional finance or previously in crypto. My hope is for our first one or two breakout projects. And then number two is, my hope is that we will be on track security token exchanges with assets that have liquidity, that are trading on them in a way that is well received by the market. And then my hope is that we'll make progress on the regulatory side, so that the regulatory arbitrage game slows down and we have less people focused on going offshore and more people focused doing things in traditional financial centers in a way that appeals highly to the most sophisticated investors in the institutional investor class. And I would say the final thing is I really want to see programmability. I really want to be able to see intelligence added to digital assets in a way that allows us to construct unique portfolios and do things fundamentally different than what have been done previously anywhere on Wall Street or in Crypto Valley.
All right, I think that was it for today.
Okay, well, thank you very much for your time. Cheers again from Beijing.
Yeah, thank you for being with us.
Thank you.
This was Valley Tokenized. Thank you for being with us.
Subscribe to our Twitter to watch the video in short Q&A format. Don't forget to subscribe to our YouTube channel if you're not following us here yet. And please ask our speaker questions and comments. We'll make sure they're answered.
See you next time.